Good morning to everyone. We welcome everyone to this webinar on the 56th GST Council meeting and its impact on various industries and on the common man. This will obviously be a very interactive session, so whatever question answers you have, you can type in. As for our faculty, we have CMA Rohit Singh with us, and we also expect to Mr. Bhogavalli Mallikarjun Gupta to join, who is a co-opted member of the Indirect Taxation Committee. Sir has some medical emergencies at home, so he may or may not join. But for the entire session, we would be having Mr. CMA Rohit Kumar Singh. Sir, we welcome you to the session. CMA Rohit Kumar Singh has 18 years of experience in taxation, litigation, and finance. He is a member of the Institute of Cost Accountants of India, Chartered Accountants of India, and ICSI. He is also a LLB gold medalist, and he has done his DSA. Rohit Singh is a founder member of Tax Marvel Consulting Services LLP and Samya Eco Solutions LLP, and is a senior partner at VMR Financial Law LLP. Sir has also been Director Finance at Rapido Technologies Private Limited, a Morgan Stanley funded tech startup. He had been the manager indirect taxations at PwC. He has been the head of GST business in GST Suvidha provider of Carvi Data Management. Then it was a top 5 GSP in India and head of commercial taxation in Gammon, India. Sir has in-depth knowledge in GST, litigation, corporate laws, finance, income tax, and outsourcing services. He is also an eloquent speaker, and he has spoken for national events on GST and indirect taxes at various seminars. He is empaneled as a faculty for GST with us, the Institute of Cost Accountants of India, and he undertakes regular batches for advanced course in GST for the last 5 years. He represents his clients at DGGST, anti-evasion, summons, advanced rulings, and departmental appeals. We welcome you to the session, sir, and we were very happy that you would be sharing your knowledge with us today. Over to you. I will make you live, okay?
Yeah, thank you, ma'am.
1 second, sir. I'll make you live.
Yeah. So
sir, you're live now.
Yeah, so I don't need to click send live, right?
Sorry, sir?
I don't need to click send live.
No, you don't need to do that.
Okay,
I have already done it. Now, if you speak, the participants will be able to hear you.
Okay. So, good morning, everyone, and we'll start with the session today. And with the excitement building up from 15th of August, when our Prime Minister announced that he will give an early Diwali for the Indian citizens. And indeed, when we have gone through the recommendation, it was kind of your early Diwali not only for the businesses but also for the common man. The agenda today will be to set the expectation. What was the expectation when this GST Council meeting was supposed to be held? What are the structural reforms that this Council meeting has recommended? The rate rationalization, impact on business and citizens, and also on the other key recommendations. And since Mr. Gupta has a medical emergency, I'll take up his presentation as well on the changes and mappings to be done for businesses to get to gear up for the rate changes. And at the end, we'll have a Q&A session. Before we start, the expectations from the common man were always that the rate should get reduced, right? So, as a common man, as an industry, the rate reduction is something which we are looking for. And the tariff kind of expedited the entire scenario, since due to high tariffs, the exports are also getting unfeasible to US and other countries. Most of us, we are aware of that this council meeting was held after approximately a gap of 9 months, right? And last council meeting was held on 21st of December, and this council meeting was held on 3rd and 4th of September. And though it was a 2-day affair, the recommendations were released only on 3rd at midnight. Generally, there is no timeline for keeping the GST Council meeting. There is no legal timeline for having a quarterly meeting or so. But we have seen almost 3 to 4 meetings a year is held. So this gap was really a long gap, and but then the council has really made up for this gap, right? The expectation from businesses and common man was naturally the rate rationalization. There were high tariffs on essential items, the white goods, right? And also on the motor vehicle and the other industry segments. So one expectation was rate rationalization for businesses. Common man was also seeking some relief on your daily items, the necessities, the kitchen items and all. There was few industry issues which were long pending to be discussed. And indeed, there were two, three issues which were recommended by the council in this meeting. One issue was inverted duty structure in certain businesses. So that also council clarified. And then the registration and refund were getting very difficult. In the recent, there was a detailed guideline on registration of home, but then each and every office was following their own procedure or practice. So this was also clarified. But then, is it that the rate will get structured from tomorrow or the recommendation will get implemented immediately? No. There is a process for implementation of GST Council recommendation. So whenever the council meeting will be held, it is always called as recommendation of the council, not a decision of the council or the outcome, right? It does not become a law immediately. So in the meeting of the council, the discussions of the members will always happen. And the members are the finance minister of the state and the union finance minister, who is the chairman of the council. They will, in some time, they will also go through the reports of the group of ministers, if any. Then the council will make the recommendation. After the council recommendation, the notification will be issued by CBIC, either tax or tax rate notification in central tax or integrated tax. Similar notifications will be issued by the state governments as state tax notifications. And then the implementation will happen either from the date of notification or a date mentioned in the notification, right? So generally the goods will not become cheaper immediately. It will be, the rates will get implemented from the date. This time the finance minister has also announced the date, that is 22nd of September. So unless and until it is notified in the notification, 22nd September is just a date announced by the finance minister. Now, the GST Council recommendation can be summed up in this broader categories. There were some popular changes which was made by the council, which impacted the lives of all citizens, ensuring the ease of doing business. So if you'll ask me, for me, I am also a happier person that my kitchen expenses has will come down shortly. Then my brother wants to buy a car, so I asked him to hold on to buy a car because the rates might come down, and it actually happened. So most of us are holding on to buying of AC, fridge, TV, and also cars, motorcycles, bikes, and all, because we all expected that rates might come down, and the government has obliged all of us. Right. Second was rate rationalization. So even agriculture had a higher GST rate. Health medicines were taxable at a 12% rate, except for few exempt medicine. Farmers also got relief. Me as a common person, except for a kind of your businessman, I play a dual role. I'm also a common man and I also am a businessman, right? I'm a practicing advocate. So I also got relief as a common man. There were two GST rates were merged into a 18 and then 5. So 28 and 12 were subsumed. When GST came, it was a broader 4 rate structure: 5, 12, 18, 28. Now it is a 2 rate broader structure, though a new rate is introduced at a rate of 40%, but it has a very few category of goods or services. So now we only have a dual rate structure: 5 and 18. 5 is being your merit rate, 18 being your standard rate. There is 40% is commonly known as demerit rate or only for sin goods. Right. Though we might deliberate, discuss, and debate on it that whether certain goods were supposed to get taxed at 40% or not. But that is something which government had a compulsion to shift it to 40 to save the revenue also, right? There were talk that some more goods should come down to 5%, but then it was not brought down to 5, it was shifted to 18% because of the pressure of the revenue also, right? In the press conference, the discussion was also there that whether the what was the estimated loss and how the government is going to recoup the loss. So one thing that it was told by the government that the estimated loss might have a figure in the mind, but then due to this reduction of rate, the tax buoyancy effect will also come. Tax buoyancy means the person will consume more, and with that consumption, the revenue might get increased, right? Then the policy thrust was there that government is betting big on renewable sector. Tax was reduced on fertilizer. There was certain recommendation on ease of compliance. We'll see when the circular will come out, when the notification will come out. Yes, the refund, faster refund is also proposed for the exporters. Earlier there was a cap on refund. Below 1,000 rupees, the refund is not granted. Now they have said that even export through post or courier, they might evaluate the refund below 1,000 rupees also. Make in India boost is there due to reduce in medical devices, packaged foods, AC, TV, passenger cars, right? Ready-made garment and footwear, they have tweaked the base rate, base slab for rate change. GST tribunal, they have made certain commitments on the date. So since last 8 years, we all are waiting for GST tribunal. Most of the matters after the first appeal either is waiting to be get filed for tribunal or people are filing writ for immediate release, right? So mostly we'll see something on the tribunal also. I'll discuss in detail on the dispute resolution mechanism through tribunal. Now, first the date, I presume that it is 22nd September when the rates will get changed. But how is an industry going to tackle it? So there is a formula or a shortcut which we say in a professional parlance, 2 out of 3 rules: supply, invoice, and payment. So if any two is before 22nd, old rate will be applicable. If any two is after 22nd September, new rate will be applicable. For example, if the supply, invoice, and payment, everything is before 22nd, obviously the old rate is applicable. But if the supply is before 22nd, but invoice and payment is made after 22nd, new rate will be applicable, right? So this is one threshold which the industry has to keep in mind while aligning the rate. There might be a possibility that the goods are dispatched at old rate, but returns are coming in the new rate, right? Or goods are dispatched, right, and invoice is issued on 22nd or 21st. Payment will come on post 22nd. So all this working the industry has to do, aligning has to be done. In the second part of the session, when I'll deliberate on the PPT of Gupta sir, there I'll talk mostly on how the industry should align, what process changes they should make, how the team readiness is to be made. Even MRP sticker printing and all is to be taken care of. Right. Now, one larger question is what will happen to the input tax credit balance? So this is one change that will impact all the businesses. There are certain businesses where rates are coming down. There are certain businesses where rates are getting increased. There are certain businesses where the commodities have got exempted. They have introduced also one more kind of your tax rate where if the goods are sent for particular industry, it is exempted. If it is sent for some other industry, it is taxable. You can take an example of insurance sector where life and health insurance to individual policy holder is exempted, but same health insurance, if medical health insurance is taken by the corporate, it is still at 18%. So how are they going to align to these kind of changes? So tax rate change, if there is no restriction on ITC, means the rate has got reduced to 5% and the entire 5% is eligible as a credit by the business. So ITC can be availed for discharge of output liability. Yes, anti-profiteering provisions are not in force. So there is a kind of your confusion in everyone's mind that what will happen to the anti-profiteering provision, right? What will happen to the how will the businesses track or how will consumer track that whether the input is available or not, or whether the input is passed on to the consumer with a reduction in prices. So yesterday there was a tweet from the Nirmala Sitharaman's office, the finance minister's office, that they are personally monitoring this situation, that all the businesses should reduce or pass on the benefit to the end consumer. Right. Second, the tax rate has changed, but the input is restricted. Like in hotels category, below 7,500 rupees room rent. Earlier, the rate of GST was 12%. Now it has brought down to 5% with a restriction in input credit. So they cannot avail input credit. So they may have multiple structures above 7,500, below 7,500. Above 7,500, they can take the input credit. Below 7.5, they cannot take input credit. Even standalone restaurant now don't have option to charge 18% GST on their own, right? They will have to follow 5% GST without ITC. So this restriction will apply from the perspective, not on the retrospective effect. And whatever ITC balance was there in their books, they can avail that ITC. Yes, ITC on capital goods will be restricted and common reversal will apply. Right? Common reversal will apply because the without restriction may not be able to avail the ITC, not only on the input service, but also on capital goods. There are certain categories now moving to exempt, right? In stationery, I remember the eraser are exempted. So an eraser manufacturer earlier had the luxury of taking ITC and charging GST. Now, after this change, they cannot charge GST because the eraser is exempted from GST. So whatever balance is there, that will automatically lapse, or he has to lapse the balance of the input credit line because now his business is moving from taxable to exempt category. So post change, there will be no ITC available on input, semi-finished, finished goods, or including your capital goods. So this is the change a business has to align as a professional, as a cost and management accountant. When we are advising our clients or when we are servicing our client, this also we need to keep in mind while we advise that on what impact the rate change will have on input tax credit, right? So I wanted to take on this rate change with business and citizen. So I've only covered the important segments and important rate change, right? So one is agriculture. Most of them are moving to 5% from 12%, except tractor more than 1800 cc, which is moving from 28 to 18%. So there is a direct push towards agriculture by reducing the GST rate. Nozzle for drip irrigation, I'll just take some examples, will be earlier it was 12%, now it is 5%. Tractors, yes, the benefit is given for tractors also. 7% rate benefit is there for less than 1800 cc. For more than 1800 cc, the benefit is coming to your 10%. Tire parts of tractors is moving from 18 to 5%. Again, there will be a kind of your dispute that might arise that if the same part is used for cars and tractors, how do businesses align, right? So usage based rate is also introduced here. If it is used for tractor, 5%. If it is used for motor vehicle, it is 18%, right? There might be some common uh, kind of your parts. So Mahindra is also manufacturing cars. Mahindra is also manufacturing tractors. So they have to keep the procurement separate to take this benefit and unnecessary. Uh, you're having any issue on from the department side on the 18% or 5% dispute, right? So harvesting or threshing machinery, including straw and fodder baler, which is used in villages for this agricultural sector, is now reduced to 5%. Right. Other agricultural and horticultural equipment and part is also moved from 12 to 5. So there is a clear push from the government towards agriculture sector. So this is also one push to the reduction of rates. Next is your household and daily use. So if we compare pre-GST regime, the rates were approximately around 21%, right? 15% or 14% VAT, and then sorry, excise was 15, and then VAT was also there. Gradually, it has come down to 5%. So this being the lowest rate of your household or daily use items, feeding bottle, napkin for babies, clinical diapers, handbags and shopping bag for jute and cotton, tableware, kitchenware, other household articles, even utilities have come down to 5%. Sewing machine, needles and parts, talcum powder, hair oil, shampoo, toothpaste, toothbrush or shaving cream. All of them have come down from 18 to 5 or 12 to 5, and this will immediately show in our kitchen budget, right? So it might also happen that the price might not come down, MRP might remain same, the unit, the weightage might increase, the size might increase. So there are two ways that this FMCG companies pass on the benefit. One is they might reduce the MRP. Second is they might not reduce the MRP, but with the same MRP, they will increase the grammage or weightage or size of the product. Right. So this might also happen in some industry, like shampoo, like soap, even Maggie and all. It might happen. Then textile and footwear segment, which is again impacting the common man. Carpets is coming down from 12% to 5%. Label, badge or similar article of textile material is again coming down from 12 to 5. Footwear and ready-made apparel. Earlier they had a slab of 1,000 rupees. So below 1,000 rupees it was 5%, and over 1,000 rupees it was 12%. Now the slab is increased to 2,500 rupees. So article, apparel, clothing and footwear, if it is below 2,500 rupees, rate will be 5%, and above 2,500 rupees, since the 12% rate is abolished, it will go to 18%. Will be charged at 18%, right? So they have passed on this benefit by increasing the threshold slab, right? So 1,000 threshold slab has got down up to 2,500, right? So this is one change that is also impacting every one of us, right? Now, food and beverage. So ultra heat treated milk, chena paneer or pizza bread will come down. There was a dispute in this paratha, that ID paratha, ready-made paratha and all. So there was 18% and then 5% and all. This dispute was always there. So they have removed this classification dispute by exempting it. So paratha bread, other Indian bread by any name will be taxed at nil rate of tax. Then butter, oils and all will come down from 12 to 5. Then nuts, dates, cashew, refined sugar 5%. Pasta, mushrooms come down from 12 to 5. One change which is a welcome change, I see ice creams coming down from 18 to 5. So this was one thing which kind of your displeased me always, that for enjoying an ice cream I am paying 18% GST. So that they have reduced to 5%. All the namkeen, bhujia, mixture which has come down from 12 to 5%. Tender coconut water, fruit and nut juices. One more change they have done is your drinking water bottle in 12 liter is reduced from to 5%. Next, there is also increase in certain categories for other non-alcoholic beer. Uh, it should be beverage. It is 40%. Caffeinated beverage, carbonated beverage, or aerated water increase from 28 to 40. The cess is removed. So by the removal of cess, also is introduced. Now coming back to automobile sector, and this is also impacting most of the middle class and the upper middle class, or even the higher segment, where the cars are reduced from 28 to 18 for certain segments, and then they are increased from 28 to 40 in certain segments. But this increase is not the actual increase, because the cess was also there. The cess was there. taxes which were as high as 51% due to cess or 48%. So yesterday, Tata Group has announced a reduction in GST after 22nd, where 50,000 rupees to 1,50,000 rupees reduction will be given. Most of the car companies will come out with offer, similar offer, where the GST rates will come down post 22nd, right? So the classification of small car is below 1200 cc for petrol and 4000 mm, and diesel car it is 1500 cc and less than 4000 mm. Parts and accessories for vehicle is reduced from 28 to 18. This was one large area for dispute, which they have removed it. All the parts and accessories for vehicle will come down to 18%. Rubber tire 18. Motorcycle also below 350 cc, below or equal to 350 cc is brought down to 18%. More than 350 cc, again it is going to 40%. So there is an increase in the motorcycle segment. Bicycle or non-motorized cycle or parts getting reduced to 5%. Unmanned aircraft, either it was rated to 28 or 18%. Now it will come down to 5%. Aircraft for personal use like helicopter, aeroplane, this they have increased from 28% to 40%, including yacht, right? So there are certain segments. So the entire rate rationalization has kept in mind a middle class or a upper middle class or the poorer segment of the society. They are getting a direct relief. Now, healthcare. So this is where I have seen that the entire push is there when people said that the medicines are also taxed at GST. So we are paying GST on medicine as well. So 3 life-saving drugs they have included to nil category. Other 33 life-saving also they have included from 12 to nil. So GST rates are exempted in this 36 life-saving drugs. There are certain medicines or medical grade oxygen which is reduced from 12 to 5%. Medical equipment like bandage, diagnostic kit, blood glucose, glucometer, medical devices, or even wadding gauge, this is reduced from 12 to 5%. Medical apparatus and device used for medical, surgical, dental, and veterinary use is reduced from 12 to 5%. You know, thermometers and all. So there is a direct push of reduction in the GST rate of medicine. So the rates of medicine might come down. The benefit will be approximately 7%, right? The exact working the industries will do. So it might happen that there in certain cases the input was higher. So because of that, they might in some cases might get into inverted duty structure also some industries. So consumer electronics also, this again we were waiting for the purchases. So it was announced that the TV more than 32 inch, earlier below 32 inch it was already 18%. So any TV now is 18%, monitor and projector, dishwasher, air conditioner and other appliances moving from 28 to 18%. So exact when the rate notification will come out, we all will come to know that what is moving into which category, which HSN code, right? As a professional, we see beyond this rate change. What we also see is we see the rate changes, we also see implementation, and we also have to see the input side of that, right? Next is the construction segment. So this is home buyers. Home buyers will directly get a benefit out of this. The cement is reduced from 28 to 18%. Brick reduced from 12 to 5%. Granite and marble blocks reduced from 12 to 5%. So this a builder should pass on the benefit to the home buyer, right? So this again is a welcome relief. Cement, bricks, and then marble and granite blocks, which is directly used for construction segment. So even for commercial constructions also, the rate will come down. How much we exactly don't know how much benefit it should give, but yes, it will be beneficial to everyone. Next big push is government is your renewable segment. So government is moving from non-renewable to renewable segment. And one more segment where the push is always there is your solar segment. So solar water heater and system and solar cooker reduced from 12 to 5%. Then biogas plant, solar power devices, solar generator, windmill, wind operated electric generator, waste to energy plants, solar lanterns, solar lamp, PV cells, ocean or tidal energy devices. All these are renewable energy devices or renewable energy segment, moving from 12% to 5%. Also, hydrogen based fuel cell technology, fuel cell for motor vehicle or fuel cell motor vehicle will come down from 12% to 5%. EV again, EV is to 5%, and there were rumors that whether EV will also get aligned to 18% when the rates of other vehicle will come down. So that did not happen. EV remains at 5%. Other vehicles have moved to 28% to 18% or 28% to 40%, depending on the cubic capacity and size of the vehicle. Next. So again, education sector, if you'll ask me, as a father of a child, it was always very painful to see GST on this pencil, pen, crayons, eraser, then exercise book and all. So eraser, GST rate is 5%. Maps, gloves, chart, right, 12 to nil. Pencil, crayon, pastel, sharpeners, 12 to nil. Exercise book, graph book and notebook is 12 to nil. Here one change we have seen in the paper segment. When you supply to a paper for exercise book, the supply of paper is also exempted. So I happen to advise certain clients who were into publishing sector, book publishing and all. So there the challenge was always there that the inverted duty was there. Not only inverted duty, their output was exempted, and again all the input accumulation added to the cost of the book. So even the supply of paper for notebook and textbook is exempted. So the thoughtful consideration is given that not only I am exempting an exercise book or notebook, I am also exempting the paper for that, right? So it might happen that this small benefit might come down to the students who will buy notebook and textbook. So continuing there from the paper to the paper segment, uncoated paper or paper board supplied for textbook and notebook is exempted now from 12%. Other than above, if the paper company is supplying, then it is 18%. So 12 to 18%. Wood pulp other than chemical grade is 5%, chemical grade is 18%. Carton boxes, cases of corrugated or non-corrugated, it is reduced to 5%. But again, the challenge in this industry is their input is increased to 18% and output is reduced to 5%. So corrugated boxes or carton boxes or cases reduced from 12 to 5. But the raw material, which is kraft paper in roll or sheet, is increased from 12 to 18%. Earlier, both of them were in 12%. So the industry did not have any inverted duty structure. Now, because of this, the inversion has come. It means that their output rate is 5% and the input has increased to 18% now. So this is one challenge which we see as a professional, that how do we have the industry readiness where the rates will be aligned, and how do we apply for refund under inverted duty structure, whether it is monthly, whether it is quarterly. This will also impact the cash flow of this industry. So one industry is uncoated paper supplied to the companies which are manufacturing textbook or notebook. 12% GST is there, which is now nil, right? And for them, the challenge is when the dealer is buying the uncoated paper, they might not exactly know whether they will supply to the mills who are printing textbook or to the mills who are using it for Xerox paper, right? So that exactly is not known when the material is supplied to the dealer or the dealer is lifting the material. So I happen to discuss this issue with the industry segment, their compliance level has increased. So they have to take an undertaking from the dealer that if you are taking it for textbook or notebook, give an undertaking or a certification at the end of the month that whatever lifting or whatever quantity you have lifted, that is used for textbook or notebook. This is one segment that the compliance level has increased. In the corrugated box industry, this new rate change has brought a challenge for them, right? Even for this car manufacturing company, they widely operate through a dealer network only, right? Your auto showrooms. So in the showroom, before 22nd of September, the cars had compensation cess. So after 22nd September, cess is getting removed. There will be stock of car which is left unsold. After 22nd September, they will only charge 18% or 40%. But what will happen to the cess? So the clarity is awaited. We'll have to see whether it will have the same fate of Swachh Bharat cess, but that point of time it was only 0.5%. This time we are talking about a higher number. The cess locked at the dealer premises is in crores. It was expected. I was hearing some news item where it was told that it can be as high as 1500 crore pan India. So we are talking about a burnout of 1500 crore. Whether government will bring out some kind of mechanism to merge it with your GST, or whether they will allow it as a one-time refund, like Tran 1, Tran 2 kind of scenario. It might happen that okay, you can transit your cess to the GST, or you can apply for a refund. Again, how the modalities will be there, we actually, as of now, we don't know. We'll wait for the circular to be issued, right, in this behalf, or some kind of guideline that department might or the government might issue for this industry segment. So my point here was that this is not always a cheer which this rate reduction has brought. It also has brought some kind of challenges for certain industry segment. Now the transport segment. So air transport in the economy class was 5%. Other than economy was 12%. Now it is increased to 18%. So business class, if you travel in the flight, you will now shell 18% GST. One more change that has happened, that rent a cab. Supply of passenger transport by any motor vehicle, where fuel cost is included, right? When you book a cab. So earlier it was 5%, right? ITC of input on the same business. The company had the option. Now they had the option of 5% and 12%. Now the option is increased from 5% and 18% because 12% is not there. GTA, again 5% was there, and they had an option of 5% RCM or forward charge. 12% was there. Now it is increased to 18% because of merger of the rates and abolition of 12% rate. Renting of motor vehicle with operator. Any vehicle designed to carry passenger where cost of fuel is included, right? Then 12 to 18, 5 remains same. So even in transport segment, this change has increased certain rates. So other services, this we need to keep in mind that health and life insurance of any kind only to individual policy holders is exempted. Not all kind of health and life insurance. Health and life insurance to the corporate is retained at 18%. So earlier it was 18, now also it is 18. So as a professional, we have to keep in mind that not all kind of health and life insurance is exempted. Budget hotel service below 7,500 per day tariff, right? Earlier it was 12%, now it is 5%, but the input is restricted. The input is restricted. So even the businesses, when they stay in this kind of hotels or their guests will stay, the businesses might not get the input credit, right? And salon, gym, yoga and spa. This is reduced from 18% to 5%. Mostly your Fit India movement on a lighter side, I can say the government wants everyone to get fit, right? So salon, good look and get fit. Gym, yoga and spa reduced from 18% to 5%. Entry to sporting event like IPL, betting, casino and gambling increased from 28 to 40%. Any sporting event except IPL where the ticket price is less than 500 rupees is exempt as of now. That is not changing. Services by job work for pharma, printing and leather segment reduced from 12% to 5%. But yes, the higher rate of job work was there for 12%, right? Job work others, which is now shifted to 18%. One more change that has happened, that unregistered local delivery service provider through e-commerce operator. So any person who is delivering the food or any items through e-commerce operator like Amazon, Flipkart, or your Zepto, Zomato, Swiggy, rate was not notified, but new rate is 18%. I'll tell you something on a history on this, that there was one e-commerce operator against whom the investigation was launched very recently, and the complaint was that they were misusing the GTA provisions. So under the GTA rule, if it is more less than 1500 rupees per consignment, the GST is not payable. So they were taking that route, right? And for each consignment, they were claiming it as exempted. So this is the kind of your clarification sort of, or a new rate introduced where 18% on local delivery service providers is imposed now, right? So this is one thoughtful change or change because of this industry alignment they have done, right? Mind it, all these rate changes will be applicable once the notification is official notification is out, and most of them will be applicable from 22nd September. Gutka, pan masala and all, there is no change. 28 plus cess is retained, 40% is proposed, but the date of implementation is not clearly indicated because of the commitment from the center to the states for repayment of loans are there. So, but the finance ministry has announced that they are confident that this rate, this loan obligation will get over by 31st of December. So mostly before that, the new rate might kick in. New rate might kick in 40%. One more interesting change that has happened, that the cigarettes, cigars and others are retained at 28%, right? So they are moved to 40%, but the BD is reduced from 28 to 18%. So even as a student of the GST, I got curious to understand why this happened. Because again, this is a kind of also kind of your tobacco only, right? And not like it's a local cigarette, BD. So some of the states requested the finance ministry not to keep the BD at 40% because around some 70 lakh workers are directly involved into production of BD or manufacture production or any process in this. So their livelihood will get impacted. Because of that, the rates were reduced from 28% to 18% in BD, not increased actually, right? So again, there are certain other economic consideration also when the GST rates are changed. So this is one economic consideration which the government has kept in mind and accepted the request of some of the states to reduce the rate of GST on BD to 18%, not to align it to 40%, right? Now we'll move on to the other key recommendation of the GST Council. So one long standing dispute in India was the place of supply for intermediary. So I remember that I had my many clients where they were facing this issue of refund. Most of the time, their export of service status was not granted because of this intermediary, non-intermediary and all. It was very difficult for us to prove to the department that this is a export of service. So Section 13(8)(b) of place of supply for intermediary is proposed to be omitted. Proposed to be omitted. And this intermediary rule will come to an exception rule of 13.2, means general rule will apply for intermediary, that is 13.2. So as per current provisions, applicable provisions, location of supplier of service is the place of supply for intermediary service. Once the omission of this 13.8b will happen, the intermediary will be classified under 13.2, that is location of recipient of service. So if I am providing service to someone who is outside India, location of recipient will become outside India. It will be easier for me to prove the export and also to claim the refund. In India now is the hub of global capability centers, right? So this will help the sales and marketing function, procurement support, GCC, selling agent, and also corporate guarantees. So in case you are an exporter, this will alter the place of supply from location of provider of service to location of recipient located outside India. And now it will be treated as export of service. Mostly they have removed the ambiguity and the dispute, right? Importer. Now commission paid to foreign entities earlier was not treated as import of service because place of supply was outside India. Because of this amendment, RCM will be applicable and also they can avail input credit on that RCM. This will only impact the cash flow but ensure that the value chain continues. This impact will have a level playing field on Indian intermediaries competing globally. Now the foreign clients, again the challenge was if the GST was applicable, it was recovered from the foreign client. And again there was a challenge. Now it will be zero rated. So the Indian capability centers might be little more competitive because of this one small amendment. So this was one long pending dispute on your place of supply for intermediary. This they have clarified, but yes, will await for the amendment in the law to be made, right? But then this clarification is a welcome move both for exporters and global capacity centers. Importers will pay GST under RCM and input can be availed if it is used for taxable services, right? Next, again, this is, I think, one interesting issue which is refusing to die down. Post-sale discount. So, a simple provision is unnecessarily complicated since long, and the implementation provision is really poor in this, where the taxpayer, the service provider is bearing the brunt of this. So, earlier the requirement was any postal discount should be backed by a pre-agreement entered into at or before the supply and linking of the discount to the relevant sale invoices. This is proposed to be removed. This is proposed to be removed. So section 15(3) and 34 is destined to be amended. So amendment is to be made providing the deduction for discount granted through credit note issued under section 34 with reference to 15(3)(b) requiring reversal of ITC by the recipient. This will make the circular dated 26 June 2024, that is circular number 212/6/2024-GST, which required a certification from CA or CMA on reversal of ITC by the customer. The challenge here was that how do the seller know whether customer has reversed the ITC or not? This is now being taken through IMS. So earlier there was no mechanism for the seller to understand whether the customer has reversed the ITC or not. Now, when you are issuing a credit note in the IMS, the customer has to accept, reject, or keep it pending. When she is rejecting the credit note, it will again be added to the liability of the seller. So, today we have a visibility, we have a kind of your, we know that whether the customer is reversing the ITC or not. So, fresh circular will be issued where no requirement of reversal of ITC provided through financial or commercial credit note. Again, there is an interesting change which is proposed. I don't know, we need to see how it is getting implemented. The value of post-sale discounted provided by manufacturer to dealer will be treated as additional consideration for supply by state dealer to the end consumer, and treatment of post-sale discount to dealer as value of supply of sales promotion activities, right, by the state dealer to principal supplier. Again, the circular was there dated 28th June 2019, which had this similar requirement. It might get reintroduced, right? Again, this might get right to play supply mismatch in case of financial credit note. Again, the department might ask us to validate whether the financial credit note any input is reversed or not. Again, this one amendment is again keeping everyone on toes, especially on the FMCG segment or pharma companies where this post-sale discount are prevalent, where we call it as lifting discount, quantity discount, volume discount, turnover discount, or whatever name you say. It was a post-sale discount only, and there were clients who were issuing financial credit or debit note to unnecessarily avoid this complication. Again, that also is brought into the ambit of taxation, and we'll see what kind of clarification is issued. And then we also have to see the amendment to be brought in the law, section 34 and section 15, right? Now, 2-3 things that are to be discussed now. One is GST Appellate Tribunal, 8 years, almost I think July 17 to now September 25. 8 years we are waiting for tribunal to get implemented. So this time the council has announced that tribunal will be operational by end of September, and hearing will begin from December 25. Means operational means you can upload your appeals from September. Hearing dates will come from December. One relief that is given as per law, the provision was whenever the tribunal is operational, within 90 days, the appeal is to be filed. So because of this delay, they have given one-time waiver that last date of filing of backlog appeal shall be 30th June 2026. So in case the tribunal is operational from September, you have 9 months time to file an appeal. But my challenge here is, because of this delay in constitution of tribunal, who is going to bear the interest cost? Suppose the SSC, the tribunal was there, and for any matter of 2018, the matter could have been decided in 2021 only, and SSC accepted the order and would have paid the tax, interest, and penalty then and there. For this additional 5 years or even 6 years, who is responsible for the interest? And when I'm saying interest, it is 18% per annum. For 6 years, it is almost 100%. So who is going to bear this 100% interest? That is, no one is answerable for that, right? Also, the principal bench of GST, that is in Delhi, will also function as National Appellate Authority for Advance Ruling. They will have dual jurisdiction. Second, some interesting kind of your changes that is proposed. So a new category of registration is proposed for low risk applicants, where monthly B2B output tax liability is less than or equal to 2.5 lakh rupees. They will be granted registration in 3 days. But I don't know how you categorize something as low risk. And then if I have a business of more than 2.5 lakh rupees, right? No one knows how much business someone will do. During application, they might say, yes, my business might be low, but then because of their relationship, because of the nature of the service or goods, they might have more business than 2.5 lakh rupees. So this is interesting to see what they are going to bring. One more kind of your change that is puzzling me. I don't know. I also have to wait and see the circular or the detailed guideline. That means council has approved in principle approval for simplified registration of suppliers of e-commerce having multiple states registration. So if I am a supplier to Amazon and I have to obtain multiple registrations because the place of supply requires me to have a registration in the place from where I'm issuing the invoice. Council has given in principle approval for simplified registration. We'll wait and watch what kind of simplified registration and process is to be followed. Right. Next, effective from 1st November 2025, provisional refund of 90% to be granted for both zero rated and inverted duty structure. But this will be based on risk assessment. So my now again the challenge here is, if something is system based, it's fine. If something is again left with the mercy of the department, that okay, department will review the each and every application, there will be a stress on the system. Even the department will have additional burden of processing the refund under inverted duty structure. And if timeline is maintained that no, you have to give refund within 60 days, you have to give refund within 7 days. So we have to balance both. The department work is multiplying. Also, the business's expectation is, if my cash flow is stuck, I should get the refund at the earliest. Next, there will be small exporters who will be allowed to claim refund where supply is made with payment of tax. One more change is proposed, that is refund below 1000 rupees, right, where the export is made through post or courier. So earlier the refund restriction limit was there, that below 1000 rupees the refund will not be granted. So this is one change that has got into effect. Now, friends, we'll move on to the presentation of Mr. Gupta, where he was supposed to discuss on the process mapping and IT changes and all. So on his behalf, I will take his presentation. So that is a request he made me to handle the. Let me just start his presentation also. Yeah. So I'll now move on to the business strategies, and rightly it is called as GST 2.0. So this is the second avatar of GST, which we all have seen multiple rate changes, multiple suggestions on the process and all. And after 8 years, the kind of excitement, expectation, and the bubbliness in the professional community I've seen, right, that yes, something is also happening on the GST side where the simplification is done. But when I'm talking about simplifying something, my first question is whether it is so simple for business or a professional. So a common man or a non-tax person will only see some kind of notification changes. But then me as a professional, I see what additional background work is to be done for aligning to these changes, right? Second, what background additional work is to be done to make my IT system ready. Not only that, to make my people ready. Take an example of FMCG companies like HUL or Procter and Gamble, where they are working with lakhs of distributor dealer network, and the chain expands to the local kirana shop. So whenever this rate is changed, my expectation is my local kirana person should also give the benefit of rate reduction. But HUL, this 7 or 8 layer chain is there. How are they going to align to these changes? And the FM has said that they will personally monitor, because the anti-profiteering provision is not there. So that is how the statement is there. Personally monitor that the rate reduction benefit is reaching to the common man. But this entire presentation is through the lens of a business, right? How the business should align, what they should carry out, right? The process, steps, and the mapping. So on behalf of Gupta sir, I'll take his presentation. So he has given his consent for me to proceed with the presentation, right? Now, so when the simplified rate structure is announced for 5% and 18%, again, As a professional, we all know that unless until final notification is published, this rate changes are only recommendatory, right? So there are key proposals which I have already discussed. Rate dropping from 28 to 18, small car, motorcycle below 350 cc, renewable energy and all. So that is there. Effective date is most likely 22nd September, but two caution is there for the businesses. Wait for official notification, read the fine print, and but prepare now. We have around 15 days only, 22nd, and then today is 7th. So almost 15 days. We all are racing against the time, right? So reading between the dotted lines. So we all know that PIB announcement are indicative and they lack legal binding because Mumbai High Court ruling is always there, and there are High Court rulings where the businesses have approached the court that something was announced but it was not made official through notification. So the courts ruled that the GST Council can only recommend. Accepting those recommendations and issuing notification is in the hand of Department of Revenue, CBIC, right? So if they have not issued any notification, you cannot bind the government because council can only recommend. The major challenge here will be product mapping exercise. So now most of I have done this for my client in past, where for almost 10,000 products, he asked me to map the rate. And not only map the rate, he also asked me to map the date of changes. If something is coming from 18 to 28, tell me the date. 28 to 18, tell me the date, right? So that is how we help the client to map. And I personally know how painful it is to go through each and every circular notification and make that changes. And at his end, he developed several your codes in the system to align to these changes. He had SAP software. Now, for the businesses, it is a caution that premature price adjustment is not to be done. Means don't keep the price same by saying that the price of raw material has suddenly increased. So this is not the time to announce any price increase in the product, though it can be genuine, right? Though it can be genuine, it was long overdue, but don't announce any price increase now. The understanding will always be that because of this rate reduction, suddenly the price is increased and the benefit is not passed on. So there is a strategic caution to all the businesses to hold on to any price increase for some time. If it is beyond the control, have a stakeholder consultation and then bring that changes, right? So there are multi-sector impact, FMCG moving from 18 to 5, agricultural machinery moving from 12 to 5, handicraft moving from 12 to 5, cars moving from 28 to 18 or 28 to 40, renewable energy moving from 12 to 5. So each and every sector is getting impacted, right? Even a paper manufacturer is getting impacted. A notebook manufacturer is getting impacted. A eraser manufacturer is getting impacted. Pencil manufacturer. So each and every this rate change will impact even a small MSME and a large corporate or largest of the corporation in India, right? Even this will impact Reliance, Adani, HUL, PNG, everyone. And this will also impact a very small businessman who might have a turnover of 50 lakh or 1 crore, right? So the rate change does not differentiate between a large MNC or a small MSME, right? Now, the most important part is training your team. So it is now that the grapevine or the unwanted rumors should be taken out. Have a comprehensive training for your team. The business should hold comprehensive training because I'll tell you something. 10 years back, the social media influence was not much, but now the social media influence is so high that even a small kind of your statement might balloon into something different, right? Even a small price tag, if it is missed out, and you might have done all the changes, even one small change not done can be a social media sensation, right, against your company. So training of the sales team, purchase team, taxation and finance team is required. For sales team, particularly the training should be correct document processing. They are issuing the correct document. Time of supply is also critical. There might be queries from the customer that why the rate is not reduced, right? Why something is not done. So time of supply provision for advances also is to be seen. Customer expectation during transition period is to be taken care of. But that is the paramount important. For purchase team, it is very important that the vendor discussion should start. Not exactly in term of the monetary value, but in term of the expectation that yes, earlier the prices were based on this rate structure. Now the rates have come down. How much benefit you are passing on, or if it is no ITC is available, then what is the impact which is coming? So focus on vendor negotiation for passing on the benefit, understanding new rate structure, and managing supplier relationship during transition. Because I feel everyone is a partner, right? Everyone is a partner to the business. We don't have supplier or customer. We have partner. The most important role will be of taxation team. They will have sleepless nights. So taxation team has to cover eligibility, reversal for exempt supplies, right? Or refund under inverted duty structure. So system is to be readied for application of refund, processing of document, training of the team is required for this entire changes. Then even ERP updates, system configuration changes, and integration of new valuation rules may also come, right? But for that, we need to exactly wait for the circular amendment notification. In case this is where the role of CMA will be critical. We have the reach, right? We have the access to the businesses, to multiple. So we can play a very critical role in analyzing the sectoral changes, rate changes, right? And prepare the teams, right? Prepare the teams to gear up for this unprecedented change, right? So we all can advise our clients to take our assistance in smooth transitioning into the new system, GST 2.0, right? Now, SOPs were drafted earlier based on certain assumptions. Now there are so many changes being done. So there will be impact on SOP also, right? So integration of new valuation rules, if the valuation rule is changing, then the valuation rules will come. Even the post-sale discount, there is no need now to link the invoice. So earlier the SOP might cover that, okay, the invoice linking is required in the SOP. Now the requirement is not there, right? Then place of supply amendment for intermediary, again the SOP will change. Time of supply for pre-chain supply, post-chain supply, invoicing, inventory redistribution strategy. So this again will undergo changes. Also, it is important that version control is to be kept. So version 2.0, version 2.2, date of issuance, all that is to be kept in mind, right? So again, I see it as an opportunity being a cost and management accountant that yes, this unprecedented change is giving me an opportunity to advise the industry, right? And handhold my clients into this new regime, right? So each and every one might have an opportunity in this change. Now, there will be long-term contracts, right? FMCG or your white goods manufacturers or your pharma companies, they will have long-term contracts with their customers and vendors both. So what will happen is pricing clause review is now important. Okay, so there might be certain contracts where price is inclusive of tax. Those contracts also have to be reviewed. So first is contract review is to be done. Identify long-term contracts with pricing clause that might get impacted by rate change. Focus on high value agreement with suppliers and customers. That should be your priority one. Undertake a benefit analysis, right? Quantify potential savings, right? Which party should receive the benefit of lower GST rate. Negotiate it properly. If the supplier requests request credit note under amendment section 15, right, without prior agreement requirement, document this entire exercise, right, through addendum, and also evaluate changes on advance in time of supply. So advance is already paid. It might also happen that service is done, but the invoice is to be issued later. So based on 2:1 rule, that it will apply for the old rate. So the approach is very crucial, especially in renewable segment. There are segments where the clients do not get the input credit, ultimate end clients, right? So they might also be government clients. They don't get input credit. So because of this rate reduction, they will sit on table to discuss, right? So it is not that you are only one who is impacted. The same discussion you have to do with your supplier also, right? That you should not bear the brunt from the customer and give the benefit of rate reduction where supplier is not passing those benefits. Okay. And this will impact profitability. Understand? This will impact profitability as well. So in case we don't do a contract negotiation, contract validation properly, this might impact our profitability. Now, this is important that the FM said that we'll personally monitor the rate change, and mostly all the large corporation will be under the eye. Everyone will go with their mobile and then click a photo of the bill, right, with a product and say post it saying that the GST benefit is not passed on. GST benefit is not passed on. So pricing sticker strategy we have to adopt. MRP bound product like toiletry, household item moving to 5% rate. A comprehensive supply chain approach is essential. So what people will do is they will try to find 13% benefit, but the benefit might not exactly be 13% because of the input also, right? Input side. It might happen that you have to issue kind of your social media advisory, these companies, that we are working day and night to reduce the rate, align the rates and all, right? Start a helpline also for these companies. In case you find someone overcharging, call us in the helpline. This will not only show you that you are with the customer, it will also show you that you want to pass on this benefit, but in case any shopkeeper or end chain provider is not passing on the benefit, report it to the company, right? This is one strategy you can take to tide with a kind of your backlash. So one is stock identification. Map the inventory at dealer, warehouse, retailer. Create a comprehensive database with current MRP. Produce the sticker, new sticker, right? Reflecting the reduced rate. Okay. And this will be done through your digital tracking also. Distribute the sticker with the field team and ensure the proper application on the D-Day, right? On the D-Day, when I say night of 21st September or whatever date government decides in the notification. Anti-profiteering risk. There is no anti-profiteering mechanism after 1st April 2025, but the government is monitoring the entire situation. Second, there is a consumer helpline by Ministry of Commerce. So even Ministry of Commerce has given a statement that we are also monitoring that the rate reduction benefit should get passed on. So they will have a helpline to register complaints. So it might also happen that you have to engage your legal team also into this activity, that suppose tomorrow any claim is coming, how to handle that claim, right? It might happen that there is no fault of yours. So there was a Delhi High Court ruling where this FMCG companies played that there was no fault on from my side. The shopkeeper did not give the benefit of reduced rate. So there the principal agent kind of your concept the court introduced, and they said the company is also liable along with the shopkeepers. So failure to update pricing could invite social media backlash or anti-profiteering complaints. Anti-profiteering is not there. There will be other helpline to monitor the complaint, right? So try to encourage sales before 22nd September. For the old inventory, try to give additional discounts and all so that your inventory is getting reduced. If I don't know if you have seen or not, many car companies have increased their discount because they feel that the cess might not get creditable or might not get transit to the new system. So whatever cess balance is lying on to the dealer or distributor, it has to get liquidated. So even the car companies have given advertisement that there might not be much benefit after rate reduction. Please bring your new car before that, right? So this again we have seen during BS5 implementation where the old two-wheelers were sold at a larger discounts, right? So that strategy also might come into play. Now, ERP and billing system update. So here system reconfiguration is to be done. And a major challenge is your system should be aligned to such an extent that up to 21st night 12 a.m. old rate is applicable. From 22nd new rates are applicable, right? So rate configuration is required like 18% for auto parts, 5% for medical goods, 40%. So each and every industry will have their own configuration to be made. HSN mapping is also required. The challenge will happen to the textile and footwear manufacturer or to someone who is having a dual rate for the first time, like paper manufacturers. If they are supplying to your notebook and textbook, it is exempted. If it is other than notebook and textbook, it is 18%. For footwear and textile, they already were there for 1,000 rupees and over 1,000 rupees. There, the configuration will be to change it to 2,500 rupees and rate changes from 5% and 18%, right? So that alignment is to be done. HSN mapping should be done for pharma, drugs, and then time of supply logic also should be applied. Again, GSTR 1 filing is to be done critically 1 and 3B because that will become base for your refund under inverted duty structure. Any mistake in filing of GSTR 1 and 3B might be a crucial. Again, my question here is, what was the need to bring from 22nd September? Though there was some P3 date and all was there, government wanted to bring it as early as possible. But then for 22nd to 30th, what will happen to the refund? How will the refund get calculated? The pro rata refund and all, right? Why will an industry leave that part of the refund? Again, the challenge is how will department process part refund? They will have a field time, whether system will let them file the refund for 7 days. GST portal might not be aligned for that. GST portal will only get you file refund for the entire month. How will you break up the exempt sale, total sale and all in the system for part period? Again, this is one question which I think as a professional I have, but I don't have any answer because time will only tell whether GST portal is aligning to this or whether GST portal is giving a kind of your option for filing refund for 22nd to 30th. Right. So this is one thing which from my side, my observation is always there. Then IT control revalidation. Again, right. This is one thing which I always felt that the access control should be given on need to know basis, not based on the role you play. So comprehensive IT control revalidation is always required. That only authorized personnel can modify price and rate. It will happen that the PO is issued at the old rate and the invoice is coming at a new rate, right? So while booking the PO, whether the same person, while booking the invoice, whether the same person can amend the rates and all. So authorization control is to be given to modify price and rate. Large organization, this will become critical. Authorization control, implement role-based access for price modification, right? There are industries where first time this rate change will happen. So for them, it is always advisable that this rate change approval remains with select few who will understand, right? Regression testing. So develop testing protocol. Before 22nd, test the output. Straight away, if we start implementing on 22nd, and if there's an incorrect invoicing that has gone out, it can create legal hassles, right? And then audit trail should be kept. That incorporate control for valuation changes, ITC tracking, and with timestamp modification record. So this is one thing which I feel is a critical everywhere, right? Next will be your yeah, yeah. Post sale discount documentation relief. So again, we'll have to see section 15 amendment, and that amendment cannot be brought through the CBIC notification and all. For that, the parliament has to approve the amendment in the law. So amended section 15 will bring significant compliance relief, right? But then the outcome will be that the process will be simplified. Teams can now process postal discount without complex resupply documentation or linking with that of invoices. So again, it is very careful for us to notify the see the fine print in the circular, right? And also optimize the ITC for inverted duty structure, right? So this is something which I feel that is critical. Postal discount will impact all the industries, right? Wherever you have mostly B2B, this will impact because you will have a long-term relationship with your buyer, where they might come back with some kind of discount or any offer, right? So that may also be there, right? Now, time of supply complexity. So section 14, rate change management in your IT, right? So time of supply under section 15 becomes crucial when goods or services supplied pre-change, but invoice and payment is received post-change. So time of supply is earlier of the invoice or payment date, right? Old rate will apply if payment was received before the change. So pre-supply agreement. So any agreement is to be reviewed. Payment received before rate change. Trigger the old rate regardless of invoice timing. Post change invoices. Invoice issued after the rate change, but payment pre-change still old rate. So the idea of this portion is that you have to also align your time of supply complexity in the calculation, right? So special attention is required for advance on services where you might already have discharged your liability, right? Adjustment might happen while issuing the new invoice. Okay, so careful evaluation is required for post notification. So again, the management will have a field day, the tax team will have a field day, even the legal team will have a field day of handling the communication. So any communication, large scale communication, if you're making, involve your contract team, involve your legal team in drafting, right? Because it might have a widespread ramification. It might have some kind of review from the authorities, review from your customers, right? Review from social media and all, which will happen. Now, there's an interesting change which has happened that the general rule for GST valuation is transaction value. Section 15, your transaction value, right? And if the section 15 is failing, means price is not the sole consideration or parties are related, then we move on to the other valuation rules, and we also have special valuation rules for lottery and all. But for this first time, retail sale price, which was already there in the excise regime, retail sale price implementation is brought into effect for tobacco. So cigarette, jarda, BD and all, valuation will move from transaction value to retail sale price valuation. So this impact will, the billing logic is to be changed, and also the ERP update is to be done. Software modification is done, right? That now the cess is also continuing for certain time. After certain time, the cess will also go out, right? So business must update their system to handle valuation method change while maintaining accurate record for compliance and audit purpose. Understand one thing, wherever this rate change is impacting, right, there will be a larger scrutiny of the department that whether the same is passed on right or not. Inverted duty structure challenges. So this the entire like kind of this if you'll see the rate reduction exercise that happened, it has also created a new segment, right? Inverted duty structure segment. So man-made textile like fiber and yarn moving to 5% from 12%. So if I am aware of this industry, the input for this is PET bottles, plastic bottles, right? Plastic scrap bottles. Okay, so their input is 18% and output now moved to 5%. So again, they will have challenge on this fiber companies or this yarn companies will have a challenge of rate blocking. Means the GST is blocked in the electronic credit ledger. So this is where the inverted duty structure refund is coming into play, right? So power man-made textile is one example I can give you. Second example will be corrugated box industry. Third example will be paper supplying to your notebook and textbook and also to other than notebook and textbook. For notebook and textbook, the input itself is not eligible. So they have to reverse the proportionate input under rule 42 and 43. One more challenge that is coming from coal segment. So the coal earlier it was taxed at 5%, now it is taxed at 18%. Cess is withdrawn. So for certain clients, we were applying cess of like refund of compensation cess, right? So they were using coal for their manufacturing process and exporting the goods, and we were getting the refund of compensation cess as per law. So again, when the cess is withdrawn, this will increase the GST rate, but only benefit that is the cess was non-creditable for the domestic supplies. Now the entire input is available for the domestic supplies, but yes, inverted duty structure might come into play, right? So strategy here will be to map the affected product comprehensively, file refund where eligible, offset against other liability, and retain in book for potential litigation, right? If the same input output rate is there, refund is not eligible, but we have certain high court rulings where courts have allowed refund. Like Hindustan Oil judgment, I remember there are 2-3 more judgments are there. Even though for the same input output ratio, refund is allowed by the court. Only challenge is, I fear that is my personal fear. I hope it does not come true. This refund exercise should not turn into an audit exercise. That if a business is going for a refund under inverted duty structure, the department should not make a full-fledged audit of the SSC. Again, that will be a trust deficit that will get created. That yes, the rates are reduced, but the refund is not given by the department, right? So that again is one thing that we'll wait and watch when the actual implementation will come into play. Closing stock management. So motor vehicle dealer is a specific kind of your segment where this challenge is coming. So motor vehicle dealer face particular challenge of closing stock purchased with cess. So again, after 22nd, I don't see any clarity on it. It was very nice that if one line even clarification could have been given to reduce the friction or kind of your uneasiness for the dealer, right? So direct refund under inverted duty is unlikely for them, but we'll wait and watch to see what is the course of action given for them. As of now, the immediate course of action is to reduce the or increase the discount and liquidate the stock. So these dealers might renegotiate with the OEM like Mahindra or with Maruti and all, or Tata, that what will happen to the cess, because or there will be a widespread return also of the goods. Then financial assessment is to be made for the uneconomical inventory, right? Or unused cars. Who will bear the loss? Whether it will be borne by the dealer or this can be taken care by both of them. Offset strategy. Retain inventory for future offset opportunity against other tax liability where regulation will permit. This is one segment where I see that the role of CMS might get increased because we understand the segment better, costing is to be evaluated and all, and our expertise is necessary for this entire transition, right? Where small car is motorcycle coming from 28 to 18, again the input blockage will be there, right? So automotive sector is one sector where we see a larger opportunity as a cost and management effect, right? Now the second challenge is your ITC restriction. Like we have seen in some industries, the ITC is not available. So 5% GST without ITC. So they will collect 5% GST from the customer, but the input is not allowed. So entire input is to be reversed. So again, rule 42, 43 might come into play, right? And not only 42, 43, rule 44 also will come into play, that if the rate restriction is there, then input again is to be reversed. So here renegotiation is required, that how the input will get blocked. So will, like in insurance sector, like 18% to exempted. So the entire 18% will not be a benefit. We all have to understand as a professional, entire 18 will not be benefit. The costing when this 18% was done, it was input was also considered. So there will be 7 to 8% average input, which is already there. So when the tax will become 0% or exempted, this 7% input will become cost. So the net benefit which the insurance companies might pass will be lower than 18, right? So for example, if the 7% input is there, so the benefit pass will be approximately 10 to 11%, not the entire 18%, because input will now become cost for them. And this is only for individual insurance. So again, the rule 42, 43 reversal will come into play for common credit. For common credit, anything for exempted, we have to reverse. So rule 42, 43 complex working is to be done. Again, here also I see an opportunity to assist the industry. Now, important is working capital impact. So we all know that stationery segment, most of them is exempted now. So rate cut in the sector like stationery, it will strain the liquidity through ITC accumulation. Because output will be zero, the entire input will become cost, and any input on the date of transition in your electronic credit ledger is to be reversed. So it might happen that the manufacturing has happened before 22nd, but the sale is happening after 22nd, right? Expectation will be from the consumers will be to reduce the entire GST, but the accumulated input also is to be taken. So excess ITC is to be assessed, right? How much excess ITC is accumulated, or you should tie up as a working capital fund, have a promotional scheme, and then consume the entire inventory before 22nd. If possible, if the short-term financing arrangement might be done for tiding this change, right? So it, as a layman, I can only see sharpener getting exempted, eraser getting exempted. But as a eraser manufacturer, I have a larger issue to handle. Okay, what will happen to my input credit which is lying in my electronic credit ledger, right? I'll do a capex. I planned a capex, right? Based on input also. Now what will happen to that capex? So cash flow modeling also becomes essential for this segment or this industry, where the entire business is to be reassessed and we'll have to see the gaps where the additional requirement of cash is also there, right? We also have to quantify the input reversal. How much input is to be reversed, right? Evidence of that reversal is to be kept. If somebody doing multiple business, like a stationery manufacturer is also manufacturing other items, then again, the exempted and taxable category working might come into play. Okay. Then budget realignment strategy. So every company will make a budget, right? Or annual operating plan, and sales numbers are worked out, and the entire budget is prepared based on ITC, right? The input credit and all. Suddenly, if the category becomes exempt, the entire budget exercise will go for a toss. So rebudgeting is to be done for the balance period, means September to March, right? So insurance exemption is there. So entire costing is to be checked, budgeting is to be checked. It can also happen that because of this removal of GST, the sales might get boosted. The individual policies might get sold more, right? So consumption increase in food item to 5%. So all this company has to manufacturing realign the manufacturing strategy for the boost demand. If the demand will increase, right? Whether I am aligned to produce, right? Produce more. So rate cut is fine. But when the demand will increase because of this rate reduction 5% from 18%, people will consume more. Am I able to supply to the market? I am a TV manufacturer, right? It has come down from 28 to 18. My 55-inch flagship model is there, which is now becoming affordable. But do I have enough inventory to cater to this additional demand? This also is to be planned. Net impact analysis. So again, government saw a transitional revenue gap of 48,000 crore, but I feel this gap is just a number or a predictive number. The demand, the consumption will increase, right? Again, there are certain economists who are saying that the consumption might not increase to the extent of government thinking. The additional cash in hand can be used for payment of loans or other avenues. It might go to investment also, right? Only time will tell what will happen. Coal-based power. So wherever the coal-based power is there, whether the unit price will change. So comprehensive planning is to be done for financial year 26. Incorporate both positive consumption and negative ITC restriction impact also. There are certain industries where both are getting hit. Rate is reduced, ITC is blocked, right? So this also we need to take into account. Next, implementation timeline. So critical path for 22nd September, and I feel this is a very lower time given. So next 3 days, immediate action is to establish task force, begin the team training, initiate IT assessment. The vendor will be choked for multiple go live projects, right? Suddenly the IT vendor will say, I don't have time, because there are multiple clients who will do same study, right? Then engage experts for complex scenarios. Short-term milestone, update the complete SOP, finalize the ERP configuration, introduce the new rates, test the system changes, contract, negotiate the contract, have the amendment of the contract, prepare pricing sticker campaign. Also engage social media campaigns, right? Engage your legal team, draft the strategy for outreach. Okay, this is also important these days. Then final 5 days, conduct comprehensive testing, train the field teams, coordinate with supply chain partners, and prepare contingency response. It can happen that you might suddenly start getting flood of queries, right? Flood of your kind of your complaints in the social media. How are you going to handle this? We all need to plan. Then go live support after 22nd of September. Execute coordinated launch, monitor system performance, right? There may be issues of your multiple handling of multiple stores, multiple locations. ERP might have an issue in all, right? The training might not be done for the cashier. There will be issue there. So address immediate issue. Prepare a war room, right? Have a dedicated team to address this immediate response. And if I feel it should be 24/7. These days, when you are working onto your online space and offline space doesn't stop, right? Maintain communication channel for rapid response. And one thing I have also seen, train your AI agents. So we all have seen that the voice agent and all is replaced by AI. So all this had to be fed into AI also. That when I'm asking a query, the agent should understand and respond properly, right? So cross-functional coordination remains critical throughout the timeline with regular checkpoint review and escalation protocol. So I think next 15-20 days for many of these industries, they will have sleepless nights. But yes, exciting days are ahead. Because of these changes, I am feeling that okay, I am getting some kind of relief, right? As a common man, if I am feeling I am getting relief, almost the relief is cross sector, cross function, and cross strata, right? Even a Mukesh Ambani will get a relief, though he doesn't want or he may want, but then he will also get some relief because this relief is given to everyone. Okay, now strategic readiness is to be sent. So the first mover advantage will always be there, right? So if you are aligning your strategy in as fast as possible with your systematic preparation, comprehensive training, and robust control, you the companies will come out kind of victorious. There will be a competitive advantage because of the readiness, right? You can take care of the risk because and there will be reactive competitors who don't prepare well, and then again they will react instead of have a proactive approach. There will be operational excellence. So well executed transition will strengthen the organization capability, improve process for discipline, and enhance team competitiveness. And also this is an opportunity for financial optimization. So rate changes is to be done properly, ITC optimization, and also refund is to be seen whether you are aligned to uh, have the inverted duty structure refund or not, right? Again, that will have some cushion, inverted duty, but again, your tax working is to be thoroughly prepared. So again, treat this transition as strategic initiative. As a cost or management accountant, I feel this is a as big opportunity as when the GST was launched, right? We all had an opportunity. This is the same opportunity, but the additional benefit is now this time we are more trained and more ready. When the GST came, everyone was new, but now with 8 years, we all have a expertise into GST now, right? So we are now geared up to take care of this scenario. So with this, friends, I'll conclude the presentation today. And I also thank Mr. Gupta to share his thoughts and views. Though due to medical emergency, he could not join. And I tried to do justice with his wonderful presentation. And please excuse me or forgive me for any mistake which I might have done during the presentation. And it was really wonderful for taking this session on the massive GST reform. So thank you, everyone.
Good morning, everyone. On behalf of the Institute of Cost Accountants of India Tax Research Department, it is my privilege to propose the vote of thanks at the conclusion of today's enlightening webinar. At the outset, I extend our heartfelt gratitude to CMA Rohit Singh Sir, Speaker of the Day, for his valuable insights. I would also like to thank all the participants who joined us today. With this, we declare the session closed. Thank you, sir.
Thank you, ma'am. Thank you.
Thank you. Hmm.